Holy shit, this could be it. XRP, the global standard.
I ain't gonna give in now. I just gotta live this now. I'm gonna be, man, I'ma kill this stuff real quick. I'ma go take it to town, cause I gotta be that king in the ring, and I'm not getting mad when I'm back with the whip. Cause I am just up on the journey. You just know that I'm just going insane.
Warriors, rise. Grand rising warriors, and good evening all over the world. Today is October 24th, 2022. And this week is massive, massive, massive for the financial space, specifically this Thursday. Now, this stuff isn't that sexy I'm about to talk about, but this has been happening dramatically and rapidly since 2020. Well, it's been happening for a while now, but since we got locked down, the money printing machine was turned on. Now we're heading into an inflationary event, interest rates going through the roof, the US dollar crushing other countries and middle class, and now we're heading into the new monetary reset. So we're going to dive into a longer video today, but I need you to pay attention, because remember, what you're paying for is your attention. We're going to go through a couple videos. I'm going to narrate those videos, and as I break them down, I want you to understand where we're heading. Will XRP be the new global standard? Now, XRP is one of the only currencies, key currency, not a security, that can move all the money through the system. So we're going to dive through a couple videos here. We're going to go first through this video. I highly recommend you subscribe to Stansberry Research. This is going to be a short clip from the video. A global monetary reset is here. Countries no longer want to be held hostage, warns Frank Gustra. Okay, now this video is really, really important to understand. It kind of kicks off the narrative I'm about to talk about today that nobody's paying attention to, that central banks are stacking gold. I don't know if it's secretly, but, well, we're not paying attention. We're worried about what Kanye West is doing, right? Central banks right now are stacking gold. Why would they be stacking gold? They're getting ready for a new monetary reset so they can have a commodity-backed currency as we move into this new quantum financial system. So we're going to watch this video, and then we're going to narrate it and continue on, and I'm going to show you the facts, figures, numbers, logic.
That they can prove that they can back the currency, whether it's to the tune of 20% or 40% gold backing with the gold that they own.
Okay, so folks might bring up the U.S. gold standard and say, well, Frank, they had stopped the U.S. gold standard. Some would argue it didn't work. Some would say it was working, but they chose to stop it. What are your thoughts on that? I mean, did it work?
Well, it was working better than what happened after 1971. I mean, look what's happened. The dollar since 1971 has lost 95% of its purchasing value. Okay, basically, when they went off the gold standard in 71, you know, they let the dollar float freely. You know, and first of all, you had 10 years of inflation, and that if you held only dollars in your checking account from 1971, it'd be worthless. You know, the purchasing power, it just isn't there.
And, you know, another counter argument would be like, well, why would they look to gold? Gold is, you know, something of the past.
Okay, so we don't want to we'd be remiss to not talk about what he just talked about. So if you've been holding just cash in your bank account and you haven't been investing in commodities or any type of companies that are growing or anything like that, if you're just sitting on cash since 1971, your cash is trash. The same dollar in 1971 takes $7.47 around there to buy the same thing that a dollar worth. Has your pay gone up that much? So you need to pay attention.
Frank, the world it would be a digital currency, whatever people are rolling out, whatever the countries choose to do next. Why not that for you?
Because I think there's been so much faith lost in fiat currencies that if someone were to launch something new, to get the initial credibility, you need to have hard asset backing. I don't know if you saw that Credit Suisse report talking about Bretton Woods 3. Mm-hmm. Very good report. I don't agree with all of it, because what Credit Suisse was saying is that the world is heading towards a currency system backed by commodities in general, right, which I think is going to be too hard to manage or too volatile. The shipping and storage is going to be very difficult to calculate, whatever. Gold, on the other hand, is owned almost universally by all the central banks already. It is viewed as money. It is money.
So if I'm hearing you correctly, the new super currency China would be victorious, and it would be some sort of central bank currency. I don't want to say digital, backed by gold.
That's what I believe.
Okay, so we're going to stop right there. Go watch that full interview. Absolutely remarkable. Danielle Cambone, congratulations to her. She is crushing it. Stansberry Research. Okay, so here's the Bretton Woods 3 that Credit Suisse put out. Now, Credit Suisse is what you need to pay attention to. This Thursday is critical for the banking system and for our monetary system. Credit Suisse is going to be announcing their numbers, so check this out. So this is a report they put out on March 7, 2022, and now on October 24th, this week, going into this week, Credit Suisse is in trouble right now. So Bretton Woods 3, so the Bretton Woods standard is the gold standard, right? This is Bretton Woods 3 that we are witnessing the birth of Bretton Woods 3, a new world monetary order central around commodity-based currencies in the East that will likely weaken the euro-dollar system and also contribute to inflationary forces in the West. That was in March. We are now heading into inflationary forces that are just crushing the West. Interest rates are going through the roof trying to cool inflation. And at the same time, during the pandemic, gold, where was it at? I had it all lined up here. The gold reserve. So basically Basel 3, where's it at here? The ratios. Okay, so I want to show you this right here. Under the new rules, banks are required to hold physical gold or other liquid assets for an amount equal or less to 85% of the value of the unallocated gold on their books. So Basel 3, during the same time when you were locked down, banks' rules to have riskier assets, they must hold gold on reserves, physical gold, not paper gold. Central banks have been quietly and secretly stacking gold. Okay, so what I think is happening right now, they're getting ready to get set up for a new monetary system. The first move is moving you into a central bank digital currency. Once they get that whole system set up and ready to go, moving you from fiat paper cash into a central bank digital currency by first being 1-to-1, and then eventually starting to devalue your fiat. So you have to move into a central bank digital currency, and then they will move into a commodity-backed currency once again.
So the week may be over here in...
So now this is really important to pay attention to as well. This week is critical for the banking system, okay? This is why they're all moving distributed ledger technology. They need liquidity. Banks are in extreme trouble right now.
The week may be over here in Europe. Markets may be closed, but I think we need to be preparing for the week to come. It's going to be a busy one. Now, one of the reasons for that is that we've got an awful lot of European banks reporting numbers, potentially set to echo the trading results that we've seen from Wall Street. We've got a number of huge names, as you can see. Tuesday, HSBC, UBS, Deutsche and Barclays. Wednesday, I think, will be fascinating. The main event, you could argue, Thursday, with Credit Suisse. We are also going to be seeing the ECB that day. We've got NatWest Friday, the whole host of other banks. We couldn't get onto this graphic. Tom Metcalf joins us now to give us a heads up on what we should be looking for and assessing here. Tom, what are you looking out for next week? What do you think the highlights ultimately are going to look like?
Yeah, well, very busy. And I think you're right to look towards Credit Suisse on Thursday. That is going to be absolutely fascinating. You know, individual case there, but what on earth is they going to decide to do? So we've had news, you know, scoop after scoop coming in the last few weeks. Yep. And it should all basically come to a head on Thursday when they're going to come out and say, here's what we're going to think this firm looks like going forward.
Okay, so here's what we think this firm is going to look like going forward. Let's go deeper into this though, okay? So high noon for Credit Suisse as European banks earnings await. So Thursday is going to be massive, okay? Thursday's going to be massive. The European banks are releasing their earnings on Tuesday, Wednesday. Thursday is the big Super Bowl, which is Credit Suisse. But something's happening behind the scenes here that you need to pay attention to. Before we do that, I want you to dive into, don't want you to, if you choose to, go to Link 2. Remember, Link 2 is partners and sponsors of this channel. We thank them so much for their support, but we are huge. Warriors are huge on this, getting in pre-IPO, IPO, not ICO, not crypto. This is on the stock market. So Ripple is pre-IPO right now. Brad Garlinghouse has said they are going to go IPO as soon as this case is over, and there still is Ripple stock available. You must be an accredited investor. Go to link2.com to get in pre-IPO. Okay, so we're going to dive into this. Okay, really, really important to understand. So we're talking about gold. Their central banks are stacking gold as you're going through all this inflationary stuff happening. Why are they stacking gold? Why are the Basel III laws changing or rules changing for banks? At the same time, Credit Suisse is in tons of trouble, but it's interesting. Blackstone and BlackRock are getting involved in Credit Suisse as things are starting to collapse. Pay attention.
What a day. You're seeing Liz Truss resigning in the UK. You just built a new headquarters there. Clearly, you have a large presence in the region. What do you think about the turmoil in leadership?
Well, obviously, the UK, Shanali, has been going through a very challenging period.
So I just want to make this clear. This is Blackstone. Remember, Blackstone and BlackRock. So Larry Fink was part of Blackstone. He broke off and created BlackRock. These are two of the biggest asset managers in the world. Pay attention to what they're doing.
From our perspective, we tend to take a long-term view. You referenced us committing to build a new headquarters on Berkeley Square in the heart of London. That's something we're very proud about. We have more than 500 employees there. We have an enormous amount of holdings in the UK across our real estate and private equity portfolios. And we're big believers in the UK long term. Near term, there are challenges, obviously, around energy, around inflation. But long term, the UK has some great attributes. It's a country that has a real magnet for talent, particularly in London. It's got rule of law, transparency, liquidity, an English-speaking population. And so we think over time, capital will come back to the UK. And as investors, sentiment has been really negative. The pound's down 17% year to date. The stocks in the UK market are trading at less than nine times earnings. And that to us represents opportunity. So
boom. I just wanted to hear that. You wanted to hear that. That represents opportunity. Okay. When there's blood in the streets, get in there, right? When there's blood in the streets, that's what they're doing. They're moving into, they're like vultures, man. These countries are collapsing. They're like, boom, we're moving in. Credit Suisse woes shows Europe's banking dilemma, BlackRock says. Major investors says bank's business review is about clarity. Swiss lender prepared to unveil turnaround plan next week. So Credit Suisse Group AG struggles with the business model, underscore the broader issue facing banks across Europe. A top executive and major shareholder BlackRock said they're like vultures. They're ready. They're ready to swoop in, right? This is the greatest time to become wealthy. Commodities, right, are being held back. So why do you think the gold price is not skyrocketing right now with inflation? Think about that for just a moment. Why isn't the commodities skyrocketing with inflation going so high? That's where people go when inflation is going high. We just told you central banks are stacking gold. They told you if you watch that whole Daniela Cambone interview, China is not sharing how much gold they have. The central banks and the banks manipulate the prices of gold. Okay. So they're going back to a commodity-based currency. And
One of the main topics up there was cryptocurrency.
I want to go back to this old video here, okay? We're going to end with this video. I know it's a longer video. Stick with me. Remember what the head of Christine Lagarde, the head of the International Monetary Fund, I think it's IMF, right? She's the head of the IMF. Listen to what she says 3 years ago. 3 years ago. It resonates with everything that's happening today.
Main topics up there was cryptocurrencies and all sorts of companies now getting into this effort, not least among them Facebook. What kind of threat does this pose to the traditional banking system?
Well, I think it's, you have incumbents, the banks, commercial banks, and you have the disruptors. And clearly the disruptors are having an impact on the incumbents. We just heard a very large systemic bank here saying that they're launching their digital coin, currently piloted in a way within the institutional clients, but to be scaled beyond that. We heard from the European Central Bank that they have launched in November something that is called TIPS, that enables all the banks in the Eurozone to actually transfer instantly at virtually no cost money between them. So I think the role of the disruptors and anything that is using distributed ledger technology, whether you call it crypto assets, currencies, or whatever, and it's far from the Bitcoins that we used to talk about a year ago, that is clearly shaking the system. The voice that we heard, which was, I thought, really interesting, were those of the regulators and central bank governors who said, well, yes, this is good and this is helpful, and it is changing the business model of commercial banks. But we have to be mindful of two things: trust and stability of the system. And we are equally concerned, we at the IMF, about stability. We don't want innovation that would shake the system so much that we would lose the stability that is needed.
And are regulators doing enough right now to ensure that stability and as well competition from some of these big tech companies being involved in this space?
You know, I think they're mindful of wherever the competition is coming from. The central bank governor of Kenya was explaining to us that they gave a banking license to a telecom company. And I think in the future, we have to look at what lots of data collectors and movers are going to do, and whether they're going to move into the banking space forcefully, in which case they will have to be regulated. They will have to be held accountable so that they can be fully trusted.
Boom. There we go. 3 years ago. This was 3 years ago, family. 3 years ago. Exactly what she's saying is happening right now. The SEC versus Ripple case is all about regulation. 100% all about regulation. Once this case settles, that will cause a reverberation effect through the economy. Ripple will be the biggest case in financial history. It will be the change in a new monetary system. We are going to have a brand new asset class, which is cryptocurrency. All the pump and dump coins are going to get smashed and get wiped out. The exchanges that are not up with regulation are going to get shut down. They're going to see a massive monopoly. Why do I think all these CEOs from these cryptocurrency companies are stepping down? Because massive regulation is coming and the whole system is about to change. First, they resist it, then they sue it, then they regulate it, then they join it. We are now heading into regulation and join phase, and there's a small group of people that are still watching this right now that have their shit together, that are investing in these new technologies that are going to change the infrastructure of the financial system and are going to be the new Bilderbergs, new Rothschilds. Just like in the 1900s, it went into industry, we are going into the quantum phase. So welcome to the new era. I appreciate you guys. I love you guys. And as we always say, Warriors, rise, get your shit together. Let's go.